Hi, Anka Agrawal here, founder of Colwood Finance, providing advice and enabling you to focus on your dreams and ambitions whilst enabling protection for your loved ones. As a landlord, how can I transfer my property portfolio to a limited company whilst minimizing tax? Asked Tony. The restriction on mortgage interest relief has made limited companies more attractive vehicles for property ownership, as the relief for mortgage interest is not restricted for corporation tax purposes. In addition, the rate of tax charged on profits is lower and succession planning is simpler. As many of you already know, when a property changes ownership, it usually becomes liable for capital gains tax and stamp duty tax. But if you're genuinely spending the majority of your time running your property business, you may be able to avoid this. As the 2013 Ramsey case showed, you can mitigate CGT provided you can demonstrate that 1. The property business is a genuine activity that provides income from the profits being generated from the activity. 2. The people in the business carry out work such as performing repairs, collecting rents, and dealing with tenants. The Ramsey case showed that they worked 20 hours in the business. We need to be mindful that the court decision was a qualitative measure rather than quantitative. Saying that you spend 20 hours per week going to network events, courses, and estate agent misses the point that you do not look after the tenants or the maintenance of the property. As such, this time is irrelevant. You therefore need to look after the tenants and not use a letting agent and organize the maintenance and repairs of the property, again, not a letting agent. You can use a letting agent to find tenants, but you should then take over the management activities. If you can demonstrate the above, then you can claim incorporation relief, which means that you pay no CGT. If you're working full-time in property and incorporate a property business, then you will avoid CGT because of incorporation relief, but you will still pay the stamp duty charge, which has become a greater issue now that the 3% charges is in place. However, there is a way that this can also be avoided. You will need to jump through a few more hoops, but in basic terms, you will need to move your properties into a partnership with 2 or more people before setting up a limited company. As with CGT relief, the property activities must be providing the majority of your income and be deemed a business as mentioned above. Luckily, a husband and wife count as 2 partners. If a property partnership incorporation exists, that is, a partnership is registered with HMRC, has a written partnership agreement, separate bank account, etc., the properties are within a limited liability partnership. Relief of up to 100% of the SDLT charge is available. Broadly, full relief from SDLT is given as long as the ownership of the new company matches the original partnership shares. This means that a genuine property partnership incorporation can be made with no immediate charge to tax and prevent the changes to the taxation of buy-to-let properties from making a significant impact whilst enjoying the benefits of a limited company. Disclaimer: each applicant's circumstances are different and they will need to seek specialist legal and tax advice on their position and what is best for them. I, as an advisor, am unable to provide advice on that. All examples featured within this video are provided for illustrative purposes only. None are intended to advise, and tax advice should be sought by the customer where appropriate. I hope that you found our response to Tony useful. Feel free to get in touch with me if you need further information. Don't forget, seek specialist advice for your specific situation. Thank you.